Welcome back to another episode. It seems to be an amazing day for semiconductor investors. A lot of upgrades have come out that are really driving some of our favorite stocks up. We can see AMD, as I am recording, is up 7%. Nvidia is also up over 7%. And even Qualcomm is up over 5.5% as I am recording. But is this too early to celebrate? Let's take a closer look in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So let's take a closer look at the broader overview of why these semiconductor stocks are up. There was an analyst from Barclays that released a few bullish points for all three companies today. So they do mention that they do not see October lows coming back for any of these semiconductor companies anytime soon, and they did increase overall price targets, and for some of them even their ratings, depending on what they might see shifting. So we'll take a closer look, and this is pretty interesting, right? Because later on in the episode I'm gonna have a few questions for you guys and hoping to get some engagement here. But we can see the semiconductor market, I'm pretty sure most of the market is similar, where year to date AMD is up over 17%. Year to date, Nvidia is up over 34%, and year to date for Qualcomm is up over 21%. So some of us might be like, hey, whoa, is it even smart to be buying stocks at these levels right now? All right, so let's take a closer look at the price target updates and maybe the overall rating updates and what's the reason to be bullish on them right now. So if we take a closer look, Barclays did upgrade the price target for AMD to $85 from $70, and they also upgraded the rating to overweight. The main reason is the growth in market share for the server market due to the release of Genoa. For those that are not familiar, Genoa is their 4th generation server CPU that recently was released at the end of 2022. The reason they're so bullish here, there's not too much competition from Intel until its next generations. While Intel did release Sapphire Rapids on January 10th, I do want to say it's not enough to kind of stop the overall growth that AMD is seeing here in the overall data center market share. I do believe it kind of shows some bullish points for Intel as they are continuing to innovate in technology, but it's definitely not an all winner for the market. So over here, the analyst is very bullish on the server side for AMD. I do want to say I'm in the same boat for AMD. I don't play with price targets too much, but I do believe this is definitely a good reason to be bullish in the company. They also do mention that certain companies are still spending a lot of money on data centers, and that's another bullish point. One of the prime examples was Meta, as they continue to kind of evolve their data center solutions. Now let's take a closer look at Nvidia. But first, if you are enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you are here, it means you're a semiconductor investor. I have a semiconductor podcast. It's free. The link is down below, or you can click the link above. Every week we talk about semiconductor market with another host. Great topics, make sure to check it out. So for Nvidia, they did leave the rating unchanged, but that's because they just had recently upgraded, I believe a week or two ago. But they did increase the price target from $170 to $250. The main reason, a huge opportunity in AI. And I do believe this is where a lot of in bullish cases for the semiconductor, these are the two main things. First, data centers, and then just overall general artificial intelligence, which can be used in everything from autonomous drivings to robotics to medical field to weather prediction to kind of studying certain physics and stuff like that, where, again, I do agree, but I'm pretty shocked by the huge price jump. Honestly, I'm an Nvidia investor, but right now, I feel like we're being a little too bullish in semiconductor stocks, and I'll explain a little bit more why there might be some things to kind of keep an eye on. But let me know in the comments below, how are you feeling right now as a semiconductor investor? The third company I'm going to talk about is Qualcomm. So Barclay did upgrade to overweight again, so they did increase their ratings, and they updated the price target from $120 to $150. A nice update there. They do mention that the boost can come from China reopening due to its overall dependency in the consumer market. So while Qualcomm is kind of expanding its portfolio into other markets, one of my favorites is the automotive market, and they are growing in the Internet of Things market as well, both for consumers and both for like enterprises and telecommunications stuff. they are very, very dependent in their mobile handsets right now, or a lot of kind of consumer products. So overall, they are saying that, hey, Qualcomm can definitely grow with the overall market just growing again as maybe certain markets are reopening. So now I have some questions for you guys, and maybe you guys can kind of share your thoughts on the comments. I'll share my thoughts, obviously. Is this too early to be bullish? Mainly because this is right before earnings, and most bullish cases are for future quarters. So, earnings are expected to come out this week. I know we have Intel on Thursday, we have Texas Instrument on Tuesday. I believe this is a time when things can get very, very volatile as we're going to start to see outlooks. And the thing that's very important to know is this analyst was bullish for mainly 2024, late 2023. So I do want to say that there might be some fear that, hey, these first 2 quarters, and something we have been looking at is over inventory correction is happening a lot slower than previously was thought about. So with these kind of crazy run-ups, right, if we take a closer look at these stock prices, how AMD is up 17% year to date, or Nvidia is up 34% year to date, it just tells me that, hey, Jose, be prepared for more volatility. If unfortunately Nvidia gives us a little bit weaker outlook than what is expected, we can definitely see stock prices drop down dramatically. At the end of the day, I'm a long-term investor. I'm not here trying to time the market, so I have no intentions of selling. But I am prepared if stock prices go down, right? I got to get myself mentally prepared for this volatility. This is another great reason why it's important to me in my investment style, where I dollar cost average. Sure, I might have bought some here, I bought some here, I bought some here. In the 5-year time frame, I definitely bought some here and here and here, right? So that dollar cost averaging is good during a downturn, but it's also kind of important in the uptrend, right? It's important not to go all in when things are falling off, but in my opinion, it's important to not go all in when we think the bottom is happening, or the bottom has happened, because with the overall volatile market, anything goes. So let me know, is it too early to be bullish right now? I personally think it's more just be prepared for the volatility. At the end of the day, buy now or wait. Has the bottom happened, or is this just a fake dump, fake pump? I wish I had the answer, right? I wish I had that crystal ball so I can just deploy every type of capital I have. For me, I do not know the answer, so for those reasons, I like that dollar cost averaging mentality. Right now, I do want to say, out of these 3 stocks, the ones that I personally am enjoying in form of price point valuation at the moment, I would say Qualcomm is probably first, AMD second, and Nvidia third. At the end of the day, I'm bullish in all 3. I own all 3, and I have no intentions of selling. So take care, have a good day, and see you next time.